Let's welcome on board then Mayuresh Joshi, Fund Manager at Angel Broking. Mayuresh, hi, afternoon. What to your mind has stood out from Q3 numbers, and where is it that you find conviction that come Q4 you're bound to see a recovery irrespective of how Q3 has been?
Afternoon, Ayesh. I know Q3 again, as Pankaj was mentioning, more or less in line with what we were expecting. But a large element of what Q3 has done, it's laid the base for a strong earnings recovery momentum to start picking up from Q4. So largely, I think the auto numbers were in line with estimates, both in terms of volume growth and the expectations of how earnings have panned out. Auto ancillaries again selectively did surprise on the positive side. IT companies clearly were a big surprise element, both in terms of the constant currency revenue growth and again the guidance given specifically in terms of the larger names towards retail as a segment. BFSI again signs of pickup as discussed by the Cognizant management. Pharma, I think a few weak numbers. Capital goods showing some signs of stability. Metals, ferrous, non-ferrous, I think had a strong show because of the realizations. Cement again, I think subdued quarter, but largely again I think the government infrastructure moves specifically in terms of affordable housing, where rural accounts for 33% of the overall demand, should start propping up the volume growth for cement companies. So our own sense is that where the government focuses specifically on infrastructure and infrastructure-led schemes, whether that be roads, EPC players, you're probably looking at power as a sector, cement players, and even the consumption themes. I think this basket over the next few quarters still should do well, both from an earnings recovery perspective as well as a compounded growth, both in terms of expected earnings as well as the actual delivery that these companies can deliver.
Well, this week, and you can't recap the week's action without mentioning what happened to the banking pack. Started off with some extremely weak numbers from SBI. You had the Nifty Bank falling 2.5%, and then of course the PNB fraud, which again continues to be a developing story, getting murkier by the hour. The Nifty Bank, by the way, is now at a 2-month low. PSU banks and corporate banks have managed to lead the fall. You had PNB being the top loser. It was down more than 22% in the week gone by. It's managed to erase all of its gains since 24th October 2017. There was SBI, Yes Bank, which both lost about almost 6%, or rather 5 to 9%. Axis Bank, Canara Bank again saw 5 to 9% fall this week. ICICI Bank, BOB, these were also big losers. Most large PSBs have also reported very high NPA divergence, and not just high NPAs, but provision stress continues for all PSBs alike. Sarveen Srivastava, afternoon. What is it that you're making of the weakness across the banking pack, and do you sense that we could see some more unwinding pressure, at least in the PSBs, the likes of a BOB, SBI and PNB in particular?
Yeah, very good afternoon. See, I'd like to first sum up a little bit in the sense that we've not been, it's been a time that we have shared views on the channel, and I will sum up what we have been doing over the last few weeks. We have been advising caution, and we have been primarily advising sell only side ideas and sell side ideas both in the Nifty and the Bank Nifty. So our first targets on the Nifty were at 10,400 and on the Bank Nifty they were at around 25,500. So they have been met. But we still believe and continue to believe with this weekly close that we had on the Bank Nifty and on the Nifty, that even though there could be a small bounce, but by and large the nature of the market has turned, and this is a sell on rise kind of setup which is now emerged. So either from here or with a slight bounce, I think we would go and test lower levels. Targets on the Nifty for us, we've been advocating 9,700 to 10,000 as a target range for the Nifty, which could be one final range before meaningful bottom happens. And for the Bank Nifty, I think comparable levels will be in the region of 23,800 to 24,000. So I think still more room to go down. But yes, for the PSU names, I think they are grossly oversold right now. So it would be difficult to give you a fresh risk reward on the sell side from here. But I think few private names like Yes Bank is close to breaking an important support. Axis also, I think another 5-6% more on the downside. ICICI also could do another 5-6% on the downside. So I would say that if the ideas are probably coming and risk rewards are being left, then probably few, as I said, private names would be better off if someone wants to short from here. PSUs would be a little difficult.
back with your trades the week ahead and still in conversation with our two experts, Sarvin Srivastav as well as Mayuresh Joshi, to analyze the fundamentals as well as the technicals of the week gone by and what lies ahead for us. And really, it's been a tug of war for the bull and the bears this truncated week, with Tuesday being a trading off. But for the broader markets, it was a little bit more disappointing. Having said that, there were a lot of mid-caps which have recovered quite a fair bit and are off from their recent lows. But I think the bigger disappointment was the fact that at a time when you saw a massive global recovery play out, we were completely aloof from that. So almost on a daily basis, the 4 trading sessions in the week gone by, you've seen that the markets start off following the global cues, but soon fizzle out. And then, of course, it was the PNB fraud also, which really dampened and soured sentiment on the street, especially with the PSU banking pack, and then that thereof put pressure on the markets in a way. But some of the mid caps which have seen a massive recovery from the lows have been Fortis. That's jumped up a good 26%. There's been a Graphite India, a Zydus Wellness which has recovered 20%. You had Indiabulls Real Estate which jumped up about 16%. KRBL, wherein Monish Pabrai has picked up a few shares. KRBL as well jumped up about 15%. Page Industries, NCC, IDBI Bank, Hindustan Zinc. These are all stocks which have been off their recent lows. And that's pretty much the case across the small cap universe as well. There's a TTK Healthcare that's jumped up 32%. Panacea Biotech, MT Edicare, HEG, Dilip Buildcon which has jumped 21%. First Source, Inox Wind, Rain Industries, Magma FinCorp, 14% jump up from the recent lows. But are we done with the sell-off? That really is the key question. And Mayuresh, I guess, you know, the bigger disappointment has been that we fell in line with the rest of the globe, but we're not catching up and rebounding in line with them.
Oh, absolutely, again, and from the lows that we probably saw a few weeks back, I think the global markets have rebounded very, very smartly for the unfortunate incidences that have happened back home over the last few days. And whatever clearly is going to transpire with the new norms that the regulator has put through, specifically on the banking system, you're probably going to see accelerated provisioning continuing on a lot of PSU bank balance sheets. And banks probably have a lot of weightage in terms of the index itself. So a large proportion in terms of the index movement has got restricted because of all these reasons. But you're right, Ayesha, I think a few of the mid caps did give a stellar set of numbers. And again, I think our own sense is that as the earnings recovery starts taking shape more meaningfully next few quarters, I think these companies probably will be in a very, very sweet spot. So we are being very, very selective on any fall. The volatility can very well continue over the next few weeks. The markets can dwindle down. But I think any correction or a sharp correction in the markets over the next few weeks to give long-term investors an excellent opportunity to probably look at large cap names and qualitative mid cap names, where our belief is that the earnings story should hold out over the next few quarters.
So what is it that you would buy if the market were to give another opportunity of a fall?
So again, within cement, as I said, the mid-cap cement basket, JK Cement, for example, I think reasonable set of numbers. And the dynamics will improve going forward with the government thrust on affordable housing, as I mentioned earlier. It's a clear winner both in terms of the white cement realizations as well as the grey cement, along with the location of its plant that should actually help in propping up its a bit upper ton on a sustained basis over the next few quarters. We've been very, very constructive in terms of infrastructure as a space. So Sadbhav Engineering, KNR Construction, Dilip Buildcon, I think all these 3 stocks can do well. Reasonable amount of order books. You're probably looking at many HAM orders coming through specifically for players like a Dilip Buildcon and a Sadbhav, which protects their IRRs. KNR, stellar set of numbers in the EPC part of their business and expected to continue posting a decent amount of ROEs and ROCs with negligible debt on their books. Again, I think out of the power space, what we really like is power transformers. So Voltam Transformer gave a brilliant set of numbers in my opinion. With a lot of the unorganized players moving out of this business and a lot more orders coming through in a sustained fashion, my belief is with a strong balance sheet that Voltam already possesses, I think margin as well as return on capital employed should hold up. So selectively on a bottom-up basis, our own sense is that these stocks on declines can do well over a longer period of time. Investors need to be very, very careful in terms of buying these stocks in a staggered way to reduce their impact cost.
Sarven and Mayuresh, both of you, thanks so much for taking the time out and speaking with us. We'll catch you again.